You want to teach us how to do order blocks?
I can. For me, remember we discussed that order blocks are a bit different my way than your way,
Yeah,
but
so
I'll
we're
show
going to
you.
discuss both, and I'll tell you what my reasoning is, and we'll see where we differ. It's not an argument, it's just a discussion. You know, there's hundreds of
Okay.
different ways of drawing things, and it'll be interesting to see your methodology. I think everybody will enjoy both.
And you guys are more than welcome to interrupt. I'm just going to start a brand new clean page. I
Okay,
think that's going to be the best way.
all right.
Otherwise, it's going to just cause chaos. And so just bear with me while I do that. Well, it won't let me share my screen. How do I do that?
Okay, let me see what I can do here. Okay, cool. Let me change this to a daily chart. Okay, so let me just zoom in here. So where I see a doji, okay, and then an engulfing candle, that is my order block. So I draw it from the bottom of the wick to the top of the wick of the doji. And that's when I know that there has been an order block there.
That's the
So
fair value gap that
yeah,
is
then there's
created.
the fair value gap added over here. So from here to here is the fair value gap.
Otherwise, it's mitigated price action and there's no order block.
Say that again.
Otherwise, it's mitigated if there's no fair value gap. Order.
So you're saying that if the price retraces back into the order block?
And if it doesn't leave a fair value gap, you can't have a order.
No, there's got to be the fair value gap.
So in essence, what that means is the investment at that order block, institutional investment, has come in, created an inefficiency in price action, leaving a fair value behind, which means that there's been an influx of investment at that particular point, creating an order book, leaving a fair value gap.
Okay, so let's do another example here. So effectively, people would say that this over here is an order block. So here's the doji. I'll draw it in the candle so that you can see it. So there's the doji over there. Yeah, I'll take a picture. Sorry about the block here. Okay, so here's a doji. And then you can see that there's fresh investment here, and then there's an uptick. Okay, even here, people could say that this is where the order block is, as there is an engulfing candle over there. The same as what people can say, here's a doji, and then there is an uptick over here. I would say that this is not an order block. This area here is not an order block. So this is not an order block in this area. I don't think I've got a pen over here. This is not an order block. What's happened here, in my opinion, okay, is let's say the institutions had 100,000, just simplistically $1 million or $1 billion, okay, worth of orders for the buyer. The chances of them filling their $1 billion order in one hit, it's not going to happen. So what the institutions do is that they split it. It's like when you've heard of a partial order. So what will happen is that their order part of their order gets filled here. Then the price goes up, and then it'll come down into this area here where the rest of their orders will be fulfilled. So I don't believe that that is an order block. It's just where the institutions placed their orders originally and the rest of their orders are being fulfilled.
I agree with you.
Good.
That's not an order block because simply there's not, it can't be classified as an order block because there's no fair value gap.
But there is over
That
here.
was, no, but that's way later.
There's an order.
So
There's an order. There's a candle here, and then you've got the engulfing candle here, this green candle.
okay. So that could be an order block time frame, or it could be a scenario because if you look at the candle dip into it, weeks into the order block and then leaves.
Yeah, so that's where we agree. We agree
That's
to
where we
disagree. That's where we differ. Okay, it depends on what's really happening.
Gentlemen, can I come in quickly?
Who's speaking?
Of course.
It's Rob.
How's it, Rob?
Hi, guys. Tell me, the definition of an order block.
An
Can
or-
we understand? Because I'm still happy.
Okay, so cool. So
When you
an
talk
order
about
block,
what
an
is
order
it?
block is
And then
basically
take it to the chart.
okay. So an order block basically is where the institutions have placed their orders, and the price comes down to that area, or they just place a buy order or a sell order, and the price goes ballistic. So for me,
an
usually
investment.
an order block happens when there is basically dojis. So there's indecision in the market, and then what happens is that for the market to move again, the institutions have to come and do something. We can't move the market. It's the institutions that move the market. So they'll come in, they'll place fresh investment, and the market will move. Guy, you want to comment?
In essence,
So
I
basically,
disagree
you're
with
talking
the
about,
doji.
sorry, gentlemen, if I read here, it says order blocks are areas on a price chart where large volumes of orders have been placed, potentially influencing future price movements and serving as key zones for potential trading opportunities. So high volume, look for areas where high trading volume suggests large trades. So would that be where Bollinger Bands would be
No.
helpful? Identify.
We don't use Bollinger
blocks.
Bands. A Bollinger Band is nothing. It's I think it's a ridiculous tool.
We don't use any indicator at all, Robbie. We use price action. And price action is...
Look, I work on price action myself. You see, guys, remember, I'm not on your level. I'm trying to understand the logic of a order block illustratively placed on the chart. So I can, in other words, the order block must be a template for me. What is the template of an order block? So when you put it on the chart, you can read properly.
Okay, let me draw it for you. Doji. Then we have like another doji. There's indecision in the market, right? So let's say there was red, okay? And now you've got dojis, you've got a sideways movement. So now the market is going sideways. Now what happens is that there is a big green candle. This gap between the top of that candle to where this candle ends is called the fair value gap.
Okay.
This area here between the yellow line and this green candle, that is where the institutions place their orders. They place their orders there. Maybe there was a wick that came, well, they had to place their orders here, and then the price moved.
So in essence, Rob, order block is an area where institution came in, placed their orders, invested in the market at to move price in the direction that they want. Now, if you've been on this group long enough and you're part of the macro analysis, I've said in the past that the market likes to move efficiently, okay? Which means, but when there's an inefficient move in the market, like Alan's drawing there, where there's a fresh investment and there's a fair value gap, that's called inefficiency. It's highlight a fresh investment, leaving a gap in price, hence the fair value gap, showing fresh investments by the institutions to move price in a direction that they want. In time, what market will do, it will become efficient by moving back, closing the fair value gap, tapping into the order block and moving back again. And that's why...
So basically, we're talking about a pullback. When that pullback is there, then it's time to engage.
So when they invest, it's inefficient, moving up, leaving the fair value gap. But markets like to be efficient. So they're going to close that inefficiency, that gap, that fair value gap, by moving it back and then tapping into the order block and moving. Because not only was there investment there, but there's orders there waiting. So that price moves back, orders get triggered, and then moves back into their direction. The question is, and if we knew this, we'd all be okay, is we don't know when they're going to bring it back into that order block to move it again. And a lot of the times, if price takes too long, maybe they've moved it, maybe the orders aren't there anymore, and it closes below that order block and mitigates that order block, and it goes lower.
Okay, so let's talk about that. So I think Rob is asking, where do we place our trade? How do we place our trade so as not to get caught out? So there's a couple of ways, Rob, that we could do this. Okay, so what normally happens is that at that order block, the price goes up, right? And then sometimes it'll stall. Okay, maybe there won't be a doji here. Maybe there'll just be a big red candle and it'll come all the way down here. Okay. Now, what some people do is they don't actually place their trades here. They wait for this retracement to come back into the order block.
That's what I'm saying.
Okay.
Yes.
I know what you're saying. I heard
agree.
you. Okay. So they'll come back down here. And this is where Guy and I agree to disagree. What Guy's saying is that, and I think I'll change my verbiage, and maybe this will fit in line with how Guy trades. Okay. So let's say I'll finish off and I'll get back to you what you're saying, Rob. So now there is a wick. So there's the wick and it's solid. And let's just move that up. That's the wick. And then the price goes back up here into the order block. I would say that this is an emotional candle, and more than likely you're going to get a green candle. Now, a lot of people, what they do is they place their order inside this order block, and then they'll place a stop loss just below the order block. So this is the SL. They'll put orders in this area here, orders, as in us retailers, not the banks, okay? Because we want to trade with the banks. If the price comes down into the SL, you'll get stopped out. Just, it is what it is. All right. So now Guy would say that when the price comes into the order block, as it touches the order block, that order block is broken. Now, in this instance, I disagree with it. I believe that because the candle retraced back up and a new candle opened within the order block, that order block needs to stay. Let me do another scenario and I'll explain it to you differently, and then maybe Guy will agree with me. Okay. So now what we got here is we've got normal candles, roughly the same size. The market is moving efficiently. This red candle here is an inefficient candle. Exactly what Guy is saying. Price went up, created this inefficiency, and then the price came down, closing this fair value gap. This is also an inefficient candle. It's too big. It's not normal. So let's say, for example, the candles come down here and they go into the order block. I would say then, yes, the order block now is disappeared. It's cancelled. Normally, the order block would be drawn to the end of the chart. When the order block happens and the order block is broken, so this happens like this, right? Now the price comes down into this order block. We leave the order block on the chart, but we need to draw it of where it was or where it ended. And it ended at this candle. So we leave the order block there just for reference to understand what is happening on the chart. Guy, can we agree on that point?
Yeah.
Do you agree with me what I've said?
100%.
Okay, so do you agree with me that if this comes down, this big candle, and goes back up and doesn't close below the order block, can we agree to then, would you leave the order block?
No.
Okay. Okay, so I leave the order block. Sorry?
It's been a liquidity sweep. It's a mitigation of that, no order block.
Okay, I disagree with it, but that's fine. Everybody each to their own. Because the price has not closed below the order block. This is an emotional candle. This is a candle that is the wick has gone.
Hang on, Al. The wick tells you that they've pushed price through that order block and sold and sold and sold to take all the stop losses in order to move it back up again.
Yes, but that means that there are orders there. I agree with you. I agree with you 100% what you've said.
What moved the price back up? All the orders have been triggered.
The orders, I think that it's not fresh investment. I think it's the orders that were left behind that weren't triggered to make up their full order of whatever, $1 billion.
I agree. And so it's moved price back up. So why is there still order block there? It's moved price back up. The orders were done and triggered to move price back up. There's no order block there. What?
Because
told me now yourself.
Because if the price goes back up, it goes into this order block and the price immediately moves up, that means that orders are there and they've re-triggered the price to go north.
So the order's been used up to move the price up.
Doesn't mean that
Why is
they've
this
closed
still-
their orders. There's still longs
Yeah,
there.
but
And that's where
so
COT
what moves
data,
the
and that's where COT data is so important, because we look at COT data and we say, well, what is happening actually with the COT data? Are they long? Yes, they are long. If they were going short and they were, and we could clearly see that they were adding shorts in a big number, then I would say to you, yes, I agree with you. Let's remove the order block. But the fact that of the matter is that the candle retraced back into the order block, or maybe it didn't. Maybe it actually retraced a little bit above the order block, like that. It didn't close below or in the order block. And a new candle opens and the price goes north.
Can you hear me still?
Okay, can I come in,
Yeah,
gentlemen?
just
Can I come in here
before
quickly?
you say anything, let me just speak to Guy. Let's get some consensus here so that we can agree to disagree.
There's two things that move the price back. It's either orders that are in that area or fresh investment.
I think
Think
it's
about
both.
logic.
I think it's
It
both.
could be both. It could be fresh investment. If it's fresh investment, then that new green candle moving back up there will leave a new order block. That's fresh
Yeah, you
investment.
see, this is where I disagree with the thinking there, because I believe that an order block is only created when there is a doji.
You look back on price, and then there are order blocks where there's a bearish candle before a bullish candle with a fair value gap. That's not a doji.
Okay, it's interesting what you're saying. So,
But that's what I've been taught.
yeah, I understand that.
Gentlemen, I agree with you both. How I was taught is that what you've just drawn there is when it crosses this, let's say the 50 EMA or most EMAs, there's always a pullback. And now when there's a pullback, and some traders call it a phase two, whether it's up or down. But in this case, I saw this as basically a reversal coming down. It's got a pullback, and your order block is basically a template you put there just to confirm that the direction is going in a bullish direction, and you're waiting for further indicators. It's just an added tool, just to support your decision in the trend. I understand what you're both saying, and what I'm saying is the same thing, it's just a different language. You're talking about a value gap. I talk about pullback. It's the same thing.
Who else wanted to say something?
Let's get some more engagement here on this conversation. If you've got a question, put your hand up and I'll add you to the stage. Don't be shy, guys. This is how we all learn. I wish you could share your screen as well.
I would show you a perfect order block. If you go to, let's say, go to gold dollar 30 minutes.
On TradingView.
Yeah, wherever, trading view.
Okay.
And go to 2:30, 31st of March. 2:30 in the morning.
Just want to open up a new...
Who else wants to say something, guys? There's no right and wrong here. We're all learning.
What time frame?
Okay, for example.
Sorry?
30 minutes. Share your trading view screen.
With the order block, you've got orders in there. Wherever it comes from, whether it's fresh investment or from wherever, it's in there, and they need to be closed. And once that candle goes through and the price goes through that all the way through, and the wick goes all the way through, and the price is back up, those orders are closed. They don't just sit there and not get closed. So that's why I agree with you, Guy, with Alan. In fact, I mean, I'm not quite sure what Alan's angle is here, but once it's gone through and it bounces back up, the orders are closed. Whatever was in there, doesn't matter where it came from. That's just my
logic.
I understand what you're saying now. I don't agree. Why would they close their orders? If they close their orders, the price will drop, not go up.
It's the triggers push the price back up.
No, I don't agree with you. I'll draw it out for you. Let me show it to you.
But before you do that, we'll talk.
Okay. So you're saying if they close their orders here, these longs, this is the fresh investment here. They've either closed some of these longs to push the price down. If they close all of the longs, then the price will fall even further.
Yeah, but at that order block, there are orders. And when price comes back into that area, it triggers those orders to buy it back up again, which is why the price moves out of that order block back up again.
So then the order block will continue to the right.
The order block is mitigated because all the orders were used to push the price.
Oh, I understand what you're saying. So, okay, now I understand what you're saying. So let me regurgitate this. So what you're saying to me is that the price comes down here, the orders trigger, therefore the order block is closed.
It's because and if the price didn't move back up again, no orders. It goes through that. And
Okay, I understand. Okay, I understand what you're saying. Let me ask you a question. How do you know that there are no more orders here? So you've closed the order block here. The price has gone up because these orders have been activated. So you're closing the order block. How do you know that there's no order blocks here? Maybe they've got a $2 million order block here, and they only used $2 billion, and maybe they only used $1 billion.
But you don't. If you all the billionaires, but it's there as a sign that that initial point moved the price up. Two things happen: either they pull their orders out and price goes through that area, or they hit that area, all the orders get triggered, or fresh investment comes in and it moves the price back up again.
I'll draw it differently for you, and then we can agree on another topic.
That's my logic.
Okay, I understand your logic. I don't disagree. I just want to draw something else for you, and why I don't remove my order block.
A bullish order block, because there's no orders there.
Okay, so let's say, hypothetically the price goes down. This order block is closed. Then we get another doji, and then a big green candle. New order block has been developed down here. Can we agree on that? Price comes back up here. Green, carries on going green. When the price comes down to, let's say, this area, another doji, in line with this order block here, and then we get a green bar, we could say that there is an order block here. Can we agree with that?
There's fresh investment.
That's fresh investment. Okay, now I understand what you're saying. You're saying to me that the order block is fresh investment.
Fresh investment, which creates an order block.
This is where we differ in opinion, because you're surmising, it's an opinion, it's subjective, that at this level here, when the price comes down into this area, that all the orders have been closed off. And I don't agree with that. I'm saying that we don't know what orders are there.
No, I'm not saying that. I'm saying when price comes back into that order block, either the orders are gone and price moves through that level and goes lower, or there are orders there that pushes the price back up because they're sitting there, but all the buy orders are there waiting for price to come back in to trigger their buy orders to move it back up again. Or
this is where I'm confused in the thinking. If the price goes up at this level, then why would you cancel this order block?
That area was used to move it back up again. So all the orders that were there,
you don't know that.
All got hit and triggered.
You don't know that all the orders were used there. This is a place of accumulation.
So you're saying that it could come back in that
100%. That's why I'm leaving my order block there.
I think the likelihood and the probability of that happening is a lot less. But yeah, okay.
I agree with you that it may not happen, but I leave it open because it hasn't really been closed. There could still be orders there we don't know, and I'll only know that if the price comes down into this area and triggers again at this area, then I know for sure. Yeah. Okay, that is definitely an order block there.
Look at Nick. Nick's saying if the wick goes right to the order block, that order block's gone, and I agree with that 100%.
Okay, I don't agree with it, but I agree that it's a liquidity sweep, and I think that it's an emotional candle. All right, and what the banks have done is they've just created liquidity to move the price back north. That means the orders are there, and they...
But if they move the price, if that wick comes through, it mitigates the order block to move it back up. And when they move it back up, a new, fresh order block has been created, which creates a new efficiency.
I don't think it's a new order block. I think it's a continuation of the old order block. But let's play it out in the next couple of weeks or months. And as the weeks and months progress, I'll show you my thinking, and let's go back to this and re-communicate about it.
Very interesting conversation.
Very.
We can only benefit from it. Go to your trading view. Go to 30 minutes for me.
So if I could just interrupt on this one.
Of course.
With a liquidity sweep. If a bank is looking for money, it goes into a liquidity sweep. If it doesn't get the liquidity there, it will go down further to get more liquidity. Is that... You understand?
100%.
Once it has the liquidity, it's going to put a new buying order in
Correct.
to take it back up again.
Correct. And create a new order block. That's my thing.
Therefore, we should not only be looking at order blocks, but we should be looking at liquidity sweeps.
Correct. Correct.
The other question is, what time frame are you looking at?
Always 4 hours. Because we always work off the 4 hour. Because the 2 EMA strategy is off the 4 hour. So I know we're in a 30 minute. Just ignore that. What I want to show you here on this graph, if you zoom in, see, for me, that's not an order block. The order block is
The order block is here for you. That's where the order block is. One of
No,
them.
go to that last bullish move up and go to the bearish candle before the bull at 2:30 on the 31st of May, 2:30 in the morning. That's not a doji, but that's a clear order block. Look at the bearish candle down before the bullish move up. That's fresh investment. That's an order block. I'm talking. Forget.
So let me rephrase it. Not necessarily, and I've said this on the group as well. Not necessarily a doji, but a 50% candle where the body is 50% the length between both wicks.
Price action tells me that they pushed it down, manipulated it down to put in a fresh investment and orders for a move back up again. Therefore, that bearish candle there's an order block.
It's interesting what you're saying.
That's how we built the order block indicator on exactly that.
Yeah, I understand that. I get how we built it, but
you're learning and you're changing.
Yeah, I'm learning and I'm changing, which is what this whole game is about.
Do you agree with me that that's an order block?
I think it's interesting. I don't know if it's an order block, but there's definitely investment there.
Well, if there's investment there, it's created an inefficiency through the fair value gap.
I don't necessarily say that it's an order block, but there's definitely a fair value gap there. But I don't agree that it's an order block. We can only know that basically if the market comes down to that place, to that price.
If you move your cursor left again,
okay.
That doji there, that bearish doji before the fair value gap, is that an order block?
I would say yes.
It would be an order block for me too, simply because it's a bearish candle for a bullish push up.
Correct. So there's definitely fresh investment here because of the doji, even here. So you're saying it's here?
Yeah.
That's where you're saying
it's the whole thing, the whole candle.
Yeah, okay, let me just...
Now, what's Tola saying? I think both of you can be correct. Nobody know if all the orders were filled, but whether it's new or old orders, it's a new order block, and else is pretty much Tola.
You're saying here that the order block is there, okay? Which I agree. I agree that that's...
But now look to the left of that.
Yeah.
There's an order block. Price is tapped in and moved out of that.
Correct. So look, I don't trade on the. I'm not looking at these time frames. I'm looking at.
No, but look at. If you look at your print, if you zoom in there, can you see how that wick has wicked right through the previous order block?
Where are you looking?
There. You see that order block you've drawn now?
This one.
Yeah, there's an order block to the left of that.
Yes, I see that. So this here.
Okay. Yes, that's an order block.
Yeah, so that's why I'm saying that. That's why I'm saying that the order block didn't originate here. The order block originated here.
I agree.
Okay. So in other words, this order block did not disappear when this candle's wick went into the order block. This just was.
To me, it's gone.
No, it's not.
To me, that first order block on the left has been mitigated.
I understand what you're saying. I agree with what you're saying. I just don't agree that the order block must be deleted. I agree that it has been mitigated, but it doesn't mean that there are no other orders there. We'll only know if there are no orders there if the price comes down. Then this order block is definitely mitigated. But the fact that the price carried on going north, there are orders there. There are institutional orders. It's a continuation of the trend. The rest of their orders have been executed. It's an interesting discussion.
Fascinating.
And this is trading, guys. I mean, everybody's got... What did you say?
I said, you bloody better have questions.
I think both of you can be correct. Nobody know if all the orders were full. That's what I'm saying. But whether it is new or old orders... Geek creates a new order block and L says correct. Old order or new orders, does it really make a difference? I think it does make a difference because for me, it says to me that, and that's why I'm posting on the Allen chart analysis, that the chances of the price hitting the order block and going north are like 85%.
Yeah. if there's orders there.
If there's orders there. If there are no orders there, then we'll go back to this and we'll say, well, no, then the order block has been stops over here, and now we need to wait for the institutions to do something.
Okay, like Nick says, let's agree to disagree.
Yeah, so it's interesting.
Calm's typing, Nicholas is typing.
I agree with Alan. We just
But
not how much orders.
85%.
Guys, it's just different ways of seeing the charts and different ways of
Yeah.
reading it. So Guy's been taught one way, I've been taught another way. This is just an interesting, lekker discussion.
I agree.
Can I just add something quickly? Thinking about the price of a horse, okay, it's 5 to 1. Okay, and the price is dropping and you get, or going up, and then you think, right, I'm going to take that price, I'm going to take that price. Eventually, no one's going to give you that price, which is why I think that he is right, that once you go through that point, everyone's satisfied. And so that order section where everyone was wanting that price is now gone. So much as the wick has gone through it and all the orders have been fulfilled. I know you're saying, Alan, that they can't, or maybe there's 2 billion and only 1 billion has been taken. But if that wick has gone through, right the way through the order block and out the other side, there are no more orders there to be taken.
That's exactly my thinking.
Just the way
Because the wick tells you, if there were enough orders there, that wick would never penetrate through. Because the orders would stop it. The fact that it went right through that order block says that it's taken everything out. Otherwise, if there were 1 billion orders there, that wick would not be able to get through that point. Because the orders would stop it.
Okay, logically, I agree with you.
Well, I can't add more to that because that's my logic.
Okay, logically, it makes total sense. I need to think about it. So I do agree with what you're saying there.
Okay, but Nicholas, we'll recumulate there again because there was a new order block platform. Remember, I showed you that on TradingView because there was a new investment with more orders there and a new order block was formed. That's why price goes back down into the new order block because the old one's been mitigated. That's there. There's the new order block on the right because the one on the left's gone.
You're saying here at this wick.
That's why price goes back there because that's the new order block. That's created the new investment.
I don't agree because it hasn't gone through the order block. If the I would agree with you. I'm sort of like leaning to understanding what you're saying, that if the price goes down here to a liquidity sweep, the wick continues all the way down here, then you're saying to me that
who knows why that specific price, Nicholas? You know, that the institutions move it where they want, how they want. If we knew that.
So you're saying, I understand what you're saying. I do agree with you. So you're saying that the order block is removed here. It carries on going up because they've got fresh investment on this side.
There it is.
Yeah, I hear what you're saying.
Price doesn't lie.
It's an interesting discussion. I need to do further research. I'll get back to you guys. But I understand what you're saying.
You know, Al,
Yeah?
you talk about the closing of the candle, but the closing of the candle is just the timing. It doesn't really matter. I mean, candles open every 4 hours or whatever the time frame is. And just because it bounces through and goes back up and it's within the 4 hours, it's not a relevant factor as far as I'm concerned.
That push price
Do you
down
understand
there. Everything.
It doesn't matter. Okay, if the candle was to close 15 minutes or an hour earlier, that would be just the way the timing is. So I don't think that you can say that because the candle didn't close time.
And that's why I disagree with your doji for exactly that point. That's why because it has to be based on candles and what the candles are showing. That's why Nick's 100%. But anyway, guys, we spent a lot of time on order blocks.
Can we move on? Have you guys got anything else to ask with regards to order blocks?
Until next. It is interesting, Nicholas.